Welcome to this week's market update from Aquus Property Group. The Reserve Bank met yesterday to discuss interest rates at their monthly meeting, and they've left them unchanged for the 10th consecutive month. We're still at a record low 2.5%, which I say is absolutely brilliant news. It's officially winter here in Australia now, and despite the beautiful balmy weather here in Sydney, most pundits are suggesting that this seasonal change is the reason for the chills going across the property markets. I would suggest that these dips are due to a different nature, but we'll have a look at that. And speaking of dips, how's this for a photo from Manly Beach yesterday morning, sent in from one of our viewers? What a beautiful sight, what a beautiful way to start the day. Let's have a look at the statistics. The previous week for the major capital cities has seen performance all over the shop. Adelaide's the best performer at 0.8% and Melbourne the worst at negative 1.2%. Annually, the figures are still very, very strong across all the major capital cities. So winter is here in Australia, and with that we usually see a downturn in the property market. But this year I would argue that things are a little different. Let's have a look at the current stock levels across the major capital cities. The two main points I want to make regarding available properties across the country are quite simple. Firstly, look at that huge difference between Melbourne and Sydney. Melbourne's got almost double the amount of properties available on the market. This is the reason why Sydney's gone through the absolute roof. And secondly, look at that difference month on month. Sydney in particular has got almost 13% more properties on the market this month. That is what is slowing down the market. This increase in stock levels is great news for us, guys. This will bring us back to a steadier marketplace. Sure, price growth won't be as aggressive, but it'll be much more sustainable. This will put us in a great place moving forward. The Reserve Bank left rates on hold yesterday for the 10th consecutive month, and the reasons are pretty clear. The global economy is tracking at a moderate pace. China's growth is slowing, and commodity prices such as iron ore are starting to dip. These all affect Australia in a negative way. Moving forward, the RBA is suggesting that rates will remain at these record lows for the foreseeable future, so if you've got a variable home loan, I'd suggest that you fix it. Let's have a look at the news. In Sydney, yet another apartment building is sold out off plan. In Melbourne, 1,000 new apartments have been approved to avoid Sydney-like housing shortages. In Brisbane, despite a quiet May, they're seeing some growth over the past quarter, so things are moving forward in the Queensland capital. In Perth, falls in house prices have been blamed on the federal budget. And in Adelaide, a $5 million residential sale has made headlines. And this week's Property of the Week is a short stroll from that sunrise photograph in North Manly. This enormous 2-bedroom, 2-bathroom apartment is being sold off plan, located in one of the best parts of North Manly. This is a great buy at $759,000. Next Wednesday, we'll come to you from Perth. In the meantime, have a wonderful week. I'm Sonntag from Aquus Property Group.